Alright, yo guys, what's up? What's happening? So yeah, we got quite a few of us over here already. We got Tykin, what's up? We got Arul Raj, we got Daniel, Kartono, Nathan, Prav, and yeah, we got Joshua and Zipporah on YouTube. So this should be great. This should be awesome. So guys, this is just an initiative to bring together the Forex community, to bring together some fantastic traders. And a little backstory, we spent some time trading last week and we met on my Forex funds, as all of us are right now trading on my Forex funds. We have Casanova with us, who's an amazing SMC trader. He trades GBP, CHF, GU, etc., etc. I'll let him introduce and break down some charts for us. We also got Ruan with us, who's fantastic at what he does. His charts are just flawless, and he has a brilliant way of orating it. So we're just gonna dive into some amazing chart analysis. We're gonna absolutely get ready for this week. Like I always tell the boys, it's always market annihilation. So we're getting ready for next week, and I think Ruan and Casanova will agree with me when we say we're gonna absolutely bang the markets out this week. And
yes, we will.
So yeah, so let's jump into some pre-market analysis and some thought processes. Remember, this is not financial advice again. This is just the way us as individuals are able to interpret and decipher the market based on our past and current experiences. So please do not take our word for it 100%. Do your own analysis, take your own trades with your own risk. And remember, if you're over trading and over risking, you can't be putting the blame on anybody else. And so just a heads up, we will be breaking down the DXY, EU, okay, so Euro USD, Euro JPY, we're looking at GBP USD, we're looking at GBP JPY, we're going to be looking at GBP CHF and possibly gold and GBP AUD also. So if any of you all trade those pairs, feel free to ask questions once the breakdown is done. And yeah, overall this should be a fun session, and let's absolutely jump into it. So yeah, so I think Casanova will be getting us started. So Casanova, why don't you just introduce yourself and jump into it, yo? And yeah. This should be exciting. Let's go for it.
Thank you. So my name's Casanova, as he said. I do trade with SMC, not the way that most people use it, in the sense that they go onto the 1 minute time frame and use 0.5 pip stop losses and 1 to 100 RRs. I don't do that type of thing. I use SMC to sort of model the trends in the market, and then use my own personal entry model to take advantage of those high time frame trends. Just a quick thing, I'll explain what it is that I use from ICT himself. Obviously, this isn't my concept. It's very simple. It's just the buy and sell model. So this is the buy model. You can see the original consolidation here. The market then consolidates again. Usually, it may give a second one sometimes. It comes down to this, and this area is sort of where there's previous trend line, or there's an order block, or support and resistance, whatever you want to call it. Usually this original consolidation is sort of the place where the institutions come together to sort of target this liquidity, and then using that liquidity, the market then moves up to where the market actually wants to go, which is usually in an uptrend. In an ideal scenario, it'd be above this consolidation, and then it'd consolidate again up here. So this is what we can see currently on the 4-hour chart on the DXY. You can see perfectly the original consolidation right here. It reaccumulated over here, and then we had another run down to this trend line. You can see it's very, very distinctive. And then we had a smart money reversal, a double bottom, whatever you want to call it. And now we're seeing these blue boxes play out on the DXY. I hope it's pretty clear for you. Just one thing I wanted to point out, which was really, really beautiful that happened this week. This was an imbalance that was caused, which is where the market moves really, really fast and creates these sort of huge candles that really need to be filled, because the banks and institutions, they didn't have the chance to get out of their positions at break even, without losing money. So what happened was the market came down. It broke this sort of intermediate high, equal highs, took that liquidity, came down, filled this imbalance, and now we can see it travel back up. So this is essentially what I think is a catalyst for the market to move up and complete this buy model that you can see, to travel back up to this consolidation. And since we're in a bullish market, I'd expect it to sort of go above and then consolidate back up here. Now, if you go onto the daily, there are a few contrarian things. Just to give another sort of point of view on the DXY, there is a massive imbalance on the daily right here. Again, you can see there's nothing to the left or right of it. It just travels super, super fast right up into this, bullish consolidation up here. So what we might see is the market traveling up, completing this short-term buy model, and then go into a sell model to sort of take out all this liquidity, engineered liquidity, I should say, from this trend line. Because a lot of people will, of course, put their stop losses below here, below here, below here. And the market, the institutions rather, they'd, ideally aim to sort of go and take out all this liquidity and potentially fill this imbalance before we see any other type of move. So it could be a buy or sell, but in the short term, I'm favoring longs on the DXY. Now, what this means for other pairs is obviously we can't trade the DXY exclusively. Since the dollar is bullish, we should see bearish markets in the short term. On EU, GU, so on, anything that is XXX USD, which brings me on to the next pair that we'll be doing, which is the Euro. This is also a very clean one. I really like it. So what we see here is, let me just go into the 4 hour. Now this is a market maker sell model, which is what we're looking at, and this is essentially the opposite. Just take the buy model and flip it. You see an original consolidation, reaccumulation. They go up to some sort of level here, resistance, support turn resistance, supply and demand, or order block, whatever you want to call it. And then we see it cascade lower below the original consolidation. So going back to the EU here, we can see equal highs. The market last week made equal highs up here. This is probably, engineered liquidity. So, like in the mid to long term, we should see the market go up higher and take out these equal highs. But in the short term, what I'm expecting is just focusing on this pair price action here. We saw the original consolidation. We see an imbalance right here, which is further confluence, adding to the bias that it should come down to this original consolidation again. And this is essentially the market maker sell model is very, very clear. We're currently in the, one of these red boxes right here. I hope that's pretty clear enough for you to see. We also have equal lows down here. So what we might see is either the market coming down to fill this imbalance on the 4 hour, as you can see here, pretty clear, and then travel higher to take out these equal highs, or we'll see the market travel even lower to take out these equal lows, grab this liquidity, and then go up high to take this liquidity up here. That's essentially my bias on the EU. What we may see happen, usually the market likes to make its lows, the low of the week if it's a bullish week, on Monday, Tuesday, or Wednesday. So what we might see is Monday, Tuesday, and Wednesday create the low of the week, come down here or here, and then we see Thursday, Friday, or Wednesday, Thursday, Friday come up and take out these equal highs. That's essentially my bias. Very, very simple. Market maker sell model on the EU and a market maker buy model on the DXY. They're very, very clear, which goes into GBP USD, which is, I think, what Ruan is doing, isn't he?
That's correct, yes.
Yep. Ruan, just introduce yourself and let's go with it.
Let's get to my chart quickly because I was paying a bit of attention there.
Yep.
So, okay, I'm just going to share quickly. Right, my name is Ruan. I'm part of the current group that met up this week for some live trades. We all trade SMC, smart money concepts, looking at institutional order flow, liquidity, order blocks, balances, and so on, incorporating it into the buyer or seller model, same as that Casanova has explained here, with sort of a BTM twist to it. Basically, what we've got here, let me just share my screen here. See if it's happening. Then we can take it from there.
Yep, we're good to go.
Okay, can everyone see it? See clearly. Okay, so currently we did a post last week on GU for a buy model, which we looking at equal highs in this region to be taken out within, we said, either Friday or potentially early next week, which would most probably be sort of around about Tuesday, to get this highs taken out, as there's buy side liquidity sitting at the top here. Currently, as the market is positioned, we saw Friday afternoon rejecting this previous high on this swing high to swing low range, indicating to us with this typical Morningstar pattern, if you're following price action or pure price action, we saw this reversal pattern play out as we expected on Friday's call, that we will have a pullback into sort of lower range, grabbing liquidity as we've mapped it out here. So we've got three levels, this one being taken out, second level being taken out, and we're reaching for a third level. Normally, from my perspective, we tend to look at three levels of liquidity grab to gain enough momentum to form a continuation to the upside in this particular model. However, what I've noticed here is that we've got quite a bit of IPA improper price action that created a nice imbalance just above this order block that we see here. So this creates a point of interest for us. So we would want to see what the Sunday open brings, and if they would to come and grab the last bit of liquidity. As we know, the banks are just as greedy as the retail traders, so they don't want to leave any money on the table. So for me, I would like to see either a move heading towards this final liquidity of the three level concept of what I use before we see a continuation to the upside into Asian session tomorrow. Alternatively, what we could see as well is price trade down lower, not necessarily straight down, but in a sort of corrective and impulse pattern, grab this liquidity to the downside, respecting this order block before forming a continuation to the upside to grab our intended liquidity, which is this previous week's high. So not this past Friday, but the previous Friday's high. Looking at it from a sessions perspective, we can see that we've had quite a bullish week last week, and with a sort of a bearish week the previous week. Well, this was this past week, heading up into a bullish week. So we see that price is starting to take out the previous session's highs, which we need to complete the cycle by fetching this highs here. So that is my expectancy for GU for this week, or my outlook, looking for two potential buy setups to complete the cycle and then fetch the sort of last potential liquidity before a corrective move down, as we see that we've engineered liquidity to the downside as we move up into the price action. So we'll have to see what this week brings. We've also got nice imbalance to the upside, so we could even see a price move beyond these two liquidity ranges to fill this imbalance here to the upside. So it could be a nice potential visit. We could see, I don't think we'll see 370 pips in one go, but we could see a nice, maybe a 280, 270 pip move overall in the week, up and down. That would be my GU trade. Keep in mind, on the lower time frames, you would want to look at key areas for potential reversal points, hence why I've mapped out the liquidity close to each order block, with obviously imbalances being lined up, just to get some refinement for those entries, for optimal trade entries. That's me on GU.
I think that was fantastic, both of you all, explaining the sentiment behind what we're looking for and the essence of what we're looking for. And so I think that was really good. I think Casanova also did a fantastic job on EU. And so just using those confluences and looking at how we're looking at the US dollar, right, and the strength it's bringing in, I'm just gonna break down gold plain and simple based on price action. And guys, like as we discussed before, a lot of the things are very similar. Okay, when Casanova and everyone talks about equal highs, we're talking it's basically like talking about resistances. When he's talking about market structure, it's talking about your lower highs, lower lows, and everything. So don't get overwhelmed by the terms that we use, and just enjoy yourself, and keep it simple. Keeping it simple is what is one of the keys to everything. And so breaking down gold, this is what I like to do. I like to break down my charts in front of you all and let you all see exactly how we do it and how we look at price action, etc., etc. So firstly, we see gold, we see it coming down, right? We see gold in the monthly time frame, and we look at the previous 2 months, right? We had a small bearish small bullish candle, and then we had a bearish plunge, which was basically a bearish spike to the downside to the 680 level, 1680 level, sorry, the 1680 level, if you look at it clearly. And so I love to use psychological levels. And so when I look at it, I look at our rejection from the top over here at the 1910 region level, and we came down, we spiked into 1680. You see, both times we touched 1680, we went right back to the top. And so when we look at gold, we need to understand that gold also plays a part like a safe haven currency, right? Gold also plays like an asset. So when there's less confidence in the US dollar, what are people doing, right? A lot of the times they're accumulating gold and other assets which appreciate, right? Which gain value when a currency doesn't. And so when we look at it, so the weekly time frame, right, we've clearly rejected. The weekly candle has closed really strong bearish, engulfing the previous week. And so we're just looking at the basic understanding of price action and the way candles close, etc. And so looking at it, we have a support down here, right? You can see the times we've reacted to it. And so that's what we're looking at. We're looking at how many times have we actually reacted to this level, and is it that key of a level for us to look at? And so that would be at 1760 flat. So you see how I align all my psychological levels to what we're doing over here. So as we go to the daily time frame, so now we know that the weekly is super bearish, right? We've closed really strong bearish, and we're reaching a zone you could call a demand zone, right? And so as we come down, we have the daily time frame, right? We have now made lower highs right over here. And so we have highs made, we have lower highs made. As we see, 1830 is a strong level. And so what we need to observe also is what did we do in the last 3 days, right? So the last 3 days, clearly we've been rejecting a certain level in this region, right over here, as seen in the past. You can see just plain price action shows you the key level that we're looking at. And so I'm just going to search for a psychological level which is really important, and that would be 1800 flat. And so when we look at this 1800 flat zone, yeah, we've rejected 1800 flat pretty solid. And as we continue going down the time frame, as Casanova said, that we are looking at a bullish DXY, right? So then we would potentially look for gold sells, because we're looking at the USD increasing its strength, right? And so what we're looking at is coming into some of these demand zones. And if we do find the potential, right, if we do continue the whole seller model of lower highs and lower lows, right, if we're able to break past this region, then we should be able to fill in this clean traffic area, as Casanova and the rest would call it an imbalance, right? And so that's what we would look at fill in. And so we have already marked out the 1760 region, which is from our weekly time frame, our demand zone or our support. And so looking at it, if we do continue breaking down, as seen on the 4-hour time frame, we have closed below the 4-hour support, but we are reaching a really important level, that is 1780. 1780 right over there. We are definitely looking at coming down and completing this imbalance, filling this imbalance, right? And capturing some of those really solid sells that we usually get on gold. And as seen, when you look at it, while coming down on gold, we've had massive impulsive moves, right? And so far, what the bulls have showed us, that we've had weak bearish, bullish pressure. So what we need to keep in mind is right now the bears are really strong, as seen over here. And so you want to keep those in mind as we come down, and if we're able to close below these levels, 1780, 1775, so you could look at this region right over here. This could be one of the key reaction zones, because guess what has happened on August 16th, on August 18th, August 19th, August 20th, August 21st, we have reacted to this zone. We've even come and tapped it once on 26th August. So we should definitely pay attention to this zone. But remember, if we do continue down, we could have a good push to the downside, which could be at least, yeah, 200 pips easy. And you know, everyone knows on gold, 200 pips is literally nothing. You know, gold basically does 200 pips in a day when it feels like. So y'all do want to be careful of gold, considering the amount of uncertainty, fear and doubt we have around the US dollar. But on the other hand, you do want to see the amount of strength that DXY is also picking up. The stock markets in the US are picking up in order to find the traction to rebuild their economy, right? So that's what they're looking at. They're looking at rebuilding their economy. So we need to look at these different fundamental factors too. We look at the fear and doubt in GBP also, which does indirectly lead to fear, the confidence and confluence in the increase in the strength of the US dollar. As you know, we are looking at these major currencies correlating with each other. So that would be my breakdown on gold. So if we do get some closes above 1800 to 1805, we should be able to fill in this clear traffic area back up, right? So what I'm looking at is, firstly, let me draw my zones right over here. And right over here. Right, so this is what I'd be looking at. If we are to create higher highs, a higher low, we could come up to fill this region, right? This clean traffic region, as we refer to it, or fill in these imbalances. And if we do break below, we definitely look at filling in this free traffic region coming down. And so definitely pay attention to your zones, pay attention to your key levels, because those are the things that will give you confirmations, etc., etc. But as you know, manage your risk, you know, watch out for these like fake outs. A lot of people on Friday, I think Casanova and all will remember, were all saying gold buys, gold buys, gold buys. And guess what? We sold off in the New York session, coming all the way down, you know. And so what you all need to keep in mind is the market is volatile. The market does what it feels like, and we are here to take whatever we can from our analysis, right? And so instead of trying to fight the market, flow with the market and do capture your pips as we look at it. And so yep, tell me, Nathan.
I think your stream's off.
Screen's off. I sent you a message.
Yeah, you got to live stream again.
On YouTube?
On Discord.
On Discord.
On Discord. Okay,
well.
1 minute. There you go. Can you see me?
Yep.
So yeah, it's back on.
All right, it's back. All right. So yeah, so that's what I'm looking at for gold, especially because gold is a very volatile pair. And if we look at it, we have been very bullish on gold, right? Ever since we turned 1680. But what we have done in the last week is we started creating a seller model, right? We started creating these lower highs and lower lows, So if we do continue to validate the seller model and continue to create lower lows and lower highs, we should definitely look at taking advantage of the sells back down. But again, we say that with a lot of caution. Look into the left, look at what has happened in this region, right? And so you want to be careful, but when you do get the opportunity, you're looking at a session open, a session, a New York Stock Exchange open, etc., etc. You definitely want to take advantage of the volume that does enter the market, right? Depending on how these models set up. And so that would be my outlook on gold. And Ruan and Casanova, feel free to add, because that was just my interpretation based on simple and plain price action. Do feel free to add whenever you all feel like, and yeah, we could go ahead and move on to the next pair.
Yeah, in terms of gold, I don't really trade gold, to be honest, so I don't have any analysis on it, but I'm sure Ruan does. Hopefully, anyway.
I think definitely looking at the obvious liquidity levels of gold with the IPA and the imbalance that's been created to the downside, I do think that it will definitely be, there looks like more opportunity to the downside potentially, keeping in mind before we need to move up, we need to move down in order to grab liquidity, to gain momentum in the market, to manage to continue the uptrend continuation. So in that regard, I do agree. I can see that what's that 1675 level is quite a key engineered level of liquidity. So for my personal trading style and strategy, that will be a very key level or obvious level for me as institutional trader to come and grab liquidity before going to the upside. But currently the market structure does show potential to the downside, and with all the imbalance and liquidity to the downside, I think that's going to be a more favorable thing. However, we need to see what the market's going to do this week to see if we get any setups and potential moves to the downside before we head to the upside.
For sure. All right, Ruan, why don't you take us through GBP CHF, pound Swiss?
100%.
Yep.
Let me do that. I'm just going to share my screen. So let's have a look. So I'm going to do a top-down analysis of this as we started to discuss earlier, just to paint the picture of what I can see in the market currently. Can everyone see my chart?
Not yet, Ruan.
Let me stop the share and just try it again. And then see if we can get this going. So it's busy going. It's loading. Internet in South Africa.
No problem.
Basically, I'll talk you through while we wait for this screen. So what I've done is a top-down analysis.
All right.
Particularly from the daily. Just so we can have a macro perspective of the market structure, because market structure is super crucial for our storytelling, but also to get an understanding of how the market and the institutional order flow works.
Yep.
Oh, we're still not streaming, eh? It's still loading. Let me try again. See if we can get this going, because it's going to be quite crucial to get this stream. Otherwise, it's going to be a bit tricky.
No problem.
Once that is hopefully. I see Casanova is also on. I don't know if that will really affect it. One can see the screen yet, huh?
Yep, not yet, Ruan. I'll tell you what, Ruan, why don't you just try to get the screen up? I think Casanova also had Casanova, you had an opinion on GBP CHF, right?
Yeah, I did.
Why don't you just give us a small breakdown into it while Ruan gets it up, and then we can continue with Ruan.
Sure. So again, very simple. I'll just start with a primer on what I'm looking at. So what we're currently in is a buy model, or at least it looks like that to me. So we start off with an original consolidation. another consolidation. Sometimes we get a second one into a level, which is this grey box, usually support or supply turn demand or an order block, whatever you want to call it. And then we see the price move back to the original consolidation. Now, what we're seeing here, so obviously this grey box here is the original consolidation. That's this green box here. And we saw price move down to these two levels where there was clearly liquidity sat below there. And it cascaded lower. It gave us a double bottom, the type of double bottom that I like, with a low and a higher low. Price basically failing to make a lower low, showing that the institutions are buying this. And then we see price correctively moving higher and higher, respecting traditional support and resistance, and creating trend lines, very flush trend lines, I should add. So what I'm expecting, at least from Monday to Tuesday or even Wednesday, I'm expecting it to fulfill this buy model by going even higher and taking out these equal highs that were made over here. And they are very flush, as you can see, which means a lot of people are putting their stops there. A lot of people are putting their breakout orders there, so for buy stops, etc. And that's where I think the institutions will be pushing the market up into this particular level. Where it goes from here, I'm not particularly sure. It is quite, I mean, it's kind of natural for GBP CHF to do this type of thing because it tends to range quite a bit, since the Swissy is not really a very volatile pair. It's quite stable. But as you can see by the fixed range volume profile over here, lots of volume is sat in this consolidation right there. And the confluence for a sell after it takes this liquidity is the fact that prices quickly move down, but every time it's gone up, it's moved very correctively. The moves down are a lot faster than the moves up. You see what I'm saying? So it took this period of time to get up to this high, but it only took 1, 2, 3, 4, 5, 6, 7 candles to go down, right back to where it started. And you can see here as well, like I said, it took 7 candles to go down here. It's taken 1, 2, 3, 4, 5, 6, 7, 8, much more, probably double, right? So you can see that the buyers are very weak. So what I'm thinking is, like I said, to complete this buy model, take this liquidity, and then potentially cascade lower and take out this imbalance or grab this liquidity down here, which you can see clearly by the fixed range volume profile indicator. But yeah, that's my view on it. Intraday, what I'd be looking for, by the way, my entry model is very simple as well. Let me just add my indicator for that. Daily open it is rather. Right, so what I'd expect is for markets open, like we saw a really good example here. Markets open, come down low in London, and then in London give us a reversal pattern, which I'd go down to the 5-minute time frame for like a break of structure, etc., to buy. But that's what I'd be expecting for it to go to the upside, probably to at least the low of this consolidation, but ideally to take out these equal highs for liquidity. Okay.
That sounds good. That sounds good, Kasa. Yo, Ruan, we can see your screen. Yep.
I can see internet's back on. Thank you, Scrum. Okay, so for me, basically, it's very similar to what Kasa said. From my perspective, looking at the macro on the daily, you could see that this previous swing high is a crucial level that we need to break the structure if we want to see a continuation to the upside, looking at key levels of engineered liquidity to the upside. And as we can see from a higher time frame premises, there's quite a bit of liquidity to the upside. As we can see, from an overview perspective, we are sort of quite low in the overall range, which would typically mean that we are in a buyer's model to have a continuation to the upside. But as we scale down, what I've done is I've mapped out key liquidity levels, looking at what we looked at on Friday and that as well. We had this liquidity grab here, taking out all these previous equal highs. That was engineered liquidity. We failed to break the structure here, as we can see here at this high of Friday. Was it Friday? Oh, sorry, this is the daily. So this was a couple of months back. But we failed to manage to break this high with this liquidity grab that we had here, showing an indication of price moving to the downside, grabbing the engineered liquidity that was created on the bottom. As price then progressed towards the present time on the daily, we see that there was multiple levels of liquidity engineered and grabbed with this sort of stop hunt or liquidity grab that we saw here with this bullish engulfing pattern that played, or this inside bar pattern, essentially not a bullish engulfing, it's more inside bar. When price moved up to sort of current day price action, where we had on Friday, and the other reason why I also chose the daily is so that I can show all the levels of liquidity that was engineered that is points of interest for us as we head into the new week, with major levels of liquidity, as Kassan mentioned as well, this lower liquidity level that was created. But looking at the current trading range, which is the swing high and the swing low, we can see that price managed to make quite nice equal new higher highs, new higher lows as we had a continuation. However, on Friday, we saw a fail of this break of structure here from a lower time point perspective, causing quite a big sell-off as we lose momentum to continue prices higher. We came down, traded into this order block, which I think as also mentioned earlier. But we can see from the previous days and weeks how price respected each order block, trading in sort of a perfect, break of structure, return to order block, at respecting the previous high low into a continuation. So currently we can see we've got two scenarios that's going to play out here. We've got this move where we're going to respect this higher low, potentially form a liquidity grab here on the previous higher low, or even the higher low before that, before heading into a continuation to the upside to grab key levels of engineered liquidity that we can see here as we continue higher. However, based on my personal strategy and liquidity hunt, and that I do think that price will maybe continue sort of lower into this current trading range to come down to an optimal trade entry sort of around sort of 3 to 4 levels of liquidity. Now, if we use our Fibonacci for our OTE, we use this trading range low to the current trading range high, we can see that this liquidity sort of lines up with our Fibonacci, our psychological levels for optimal trade entry, which will then validate multiple confluences with this imbalance liquidity grab of multiple levels and for a potential move higher. So I do think we will trade down lower. We need to see what price does and how it reacts to these liquidity levels, because we can see, as we know, price doesn't just move straight in a straight line. It will have multiple levels and correction impulse and corrective waves. So I would then say that we would most likely, I would like to see price come down from our OTE before price heads up to grab the key levels to the upside, with obviously imbalance and liquidity levels in line. We could also see price move slightly lower. However, if we do manage to break this previous swing low, I could see that price will definitely, based on that level, would then rather target the major liquidity levels to the downside before we could see any reversal to the upside or continuation, or I'd say to the upside, because we've got quite a bit of liquidity that's sitting here. And as we know, banks don't like to leave any money on the table. So for me, this would be quite an interesting level or range for liquidity. And what we've also see here, apart from this liquidity level here, we've got as well some nice order blocks and a little bit of imbalance here that could respect or act as support from a supply and demand perspective. But in the short term, because we've grabbed 3 key levels of liquidity, I'm more in favor, or my bias would be more bullish, and I see this just as a cooling down phase before we see a continuation to the upside to grab some liquidity. And once we see this key level broken here with a clear close, a candle close above this level, we can then expect a retracement with a continuation to the upside. So that's stuff that I would look out for this week, which we can obviously monitor as we go into the live sessions.
Just to quickly jump in, Ruan, and Casa got me really interested in GBP CHF when we were looking at it just before you came. And so just looking at it from a monthly standpoint, coming down from higher time frame analysis, this is what I would potentially look at in any pair, that I do analyze and break down. Is 100% I agree with everything you've said, guys. The way Rohan has broken it down for you is so well done. And so this is what I would personally look at some of these regions for. So when we look at the monthly time frame, firstly, our failure to stay above the 1.3 flat level, right? Our failure to stay above it multiple times is what would give me some doubt in possibly breaking some of these regions. But when we do also look at the 127,800 region, it has been prone to be a very key region in whether it was rejections, whether from a resistance or from a support, as in this case. So just looking at it, looking on the weekly time frame, that we have continuously made low highs and lower lows. And although this week we have negligibly closed above this previous resistance formed on the weekly, right? If we do have market open and failure to close above 127,400 and do see a reversal, right? So if we do see failure to break the previous week's high, I do feel that we could continue down, like you said, right, to capture a lot of the imbalances that are there to the downside once we break below 1.25 flat. And so looking at it, Casa also broke down, that we have had more impulsive sells than these impulsive buys, right? You see the momentum on the buy side as compared to the sell side. And so when we look at it, I would definitely expect some impulsive sells, especially when we look at the 4-hour time frame. And I did show Casanova this, this region between 1.27400 and 1.27200, as you see, has been a key region, right? It's been so key to rejections, it's been so prone to reversals, etc., etc. In the past, you can see how price has treated this level and this zone, in fact. So looking at that and looking at the way we did try to spike into it on 9th September, and we did try to break into it on 10th September, but closing right below, thus signaling a fake out, would be something I would look at for sure. But like you all said, if we do have breaks above these regions, continuing the weekly in a bullish trend, we should be able to push up to this resistance that we have here, or a supply zone, as you would call it, as Casa called it, also the equal highs, right, where a lot of people do have this stop losses and buy stops, etc., etc. And on the other hand, I would say, if we do start breaking below these lows, these equal lows, I definitely look at a lot of time frames that's like 2-hour, 3-hour, 4-hour time frames. Many of these equal lows, and we do start forming a seller model, right? Then I would definitely look at those impulse sells down, because like how Casa caught quite a few buys up, I would say that, if we do show enough seller strength in these regions with price action and respect of these certain levels and breakout of these certain levels, we would see some massive moves down. Considering the fundamental factors of uncertainty, fear, and doubt around the GBP pairs with their relations in regards to Afghanistan, etc., etc. So that's just the way I look at it. And guys, if you look at it, all our analysis definitely came aligned, with what we are definitely looking at, and the way we are looking at price action, the way we're looking at demand supply, and basically what Ruan and Casanova said of smart money, right? Smart money concepts. So when y'all are doing this, we need y'all to be careful of these levels that we look at. You should do your due diligence and definitely look at some of these levels that we mark out on our charts and not just blindly take trades based on our analysis. And yeah, Ruan, thank you so much for that. That was awesome. If you have anything to add, I don't mind.
I think I'm 100% in agreement with you. To the downside, if we do see a shift in market structure, or some of you might know it as a SMS or MMS, depending on what sort of training you've done. But definitely, if we see a failed continuation of that momentum to the upside, and we do see a confirmation with a break of structure to the downside, we definitely going to look for sales. I mean, look at EJ last week, what was it, Friday, that me and Casa took those trades on EJ. It was just super explosive.
Superb, yeah.
But just waiting for added confluence, I think, is super important.
100%.
I mean, we know that the market can go up or down. That's why we do the analysis and try and be objective as possible and not particularly biased about a specific market. But we look at it and discuss it as a team and see where the best, highest probability setups would be.
100%. So so that was awesome, Ruan and Casa. Casa, I think you're going to take us through EJ right now.
Yes. Let me just get it up. 1 second. Right. So can you see my screen?
Yep.
Okay, perfect. So just 1 second. I'll just mark this up real quick. Right, so again, I want to bring your attention to one of the models I use in my trading, one of the two models I use. So the market maker sell model in this case. And we have, again, I know I'm going to sound like a broken record, but repetition is the mother of all learning, right? So you see the original consolidation, the market pulls back. Sometimes it doesn't do this, but it pulls back, it rejects sharply, goes up to a certain level, an order block, a support, whatever, and then it just comes back down, cascades lower with a few areas of consolidation in between or retracements, and then ideally it goes below the consolidation, the original consolidation. So going back to EJ now, just to confirm that this is where I think the original consolidation is. By the way, we are on the daily time frame, so this is a more long-term view. I will go into my short-term view in a second. I'll just use the, again, fixed range volume indicator. So from this, you can see that most of the volume, and you can see it's quite a large amount of it, is sat right here in the middle of this range right there. And that is what I think is this original consolidation right there. And you can see price came up, it paused, retraced, and it shot back up after it failed to break back into this range. So it continued to go higher and higher, and then it went to this key level up here. It broke right above it, took that liquidity, and now is cascading lower. It created a few imbalances on the way, came back and refilled them, which were these red boxes over here. And I think we are in currently the second, what would be the second red box there. Of course, what I'm expecting is to see market to travel down lower and come back into this consolidation, maybe consolidate there, and perhaps go even lower to these imbalances right there. Now, going into the shorter term, so of course I'm trading within, in tandem with the higher time frame bias. So we've established that the higher time frame bias on the daily is lower. So I'm looking for sells on EJ, and you can see here we've had clean price action. The original consolidation is right here. I'll just use the fixed range volume profile, just add some confluence there. You can see there's a lot of volume there. The reason why I'm not using this area is because we've already came down to here and we rejected that very, very sharply on Friday. This was the sell that me and Ruan took. Really, really good sell. Came right up to this little, let me see here, order block right there, and it gave us a nice model on the 1 minute. I think, let's see.
It was 130.200 was the entry, and the stop loss was 130.232.
Exactly,
it was a nice, super tight setup.
And just to break down why we entered. So first of all, on the high time frame, we went out an order block, which is ideal for our order block. And we see on the 1 minute time frame for our entries, we saw this sort of demand or resistance, support, whatever you want to call it, a form right here where the price is obviously holding above this level. Then we saw a price break through, and the place where this move originated from was this candle here. So then me and Ruan, we waited for a break. We waited for it to retest either the 50% or the order block. It came to the order block and we entered. And as you can see, it's pretty obvious. It came right down. I wish I held for a bit longer, but unfortunately, you got to take what you got to take, right? But anyways, onto my weekly review. I think what we'll see is the traditional market maker style model complete. We should see it come down lower and lower to ideally this original consolidation over here. Oh yeah, another thing I should add as well. If you do look on places like Daily FX or any other sort of economic news site, you'll see that the euro is very, very bearish right now because of various announcements that they've made. The euro is very weak, which does fall in line with this market maker style model completing. So what I'm expecting is at least the entry model that I use, again, very simple. So we'll see an Asian consolidation, we'll see it pop back up, fake out in London, maybe to this order block right there, and then we'll see like a double top formation or go down to the 1 minute and see this type of setup right there, and then we should see it go down. Maybe until Wednesday we might see another reversal, or in theory, based off of high time frame bias, it should just continue down. But yeah, I don't tend to focus too much on high time frame trends because I don't trades for longer than a few days. Usually my trades are over within a day max. But yeah, that's why I'm thinking this should continue downwards into this original consolidation to complete this market maker style model. But yeah, very simple. I know I sound like a broken record. All my charts look model the same, but that's sort of the key to success, to just keep doing the same thing over and over again, and find your model and just refine it and just keep refining. But yeah, that's my EJ view.
Fantastic. That is solid. Ruan, do you want to add anything to EJ?
No, well, I can actually add one thing. So, as Casa mentioned, from this lower levels, let me just delete all of this. This lower levels with the imbalances that he mentioned, with equal lows on, I think the lower. Let's go to a lower time frame. So let me go to 4 hour. What I do think, what would be crucial for us is to see a break of structure below sort of this level here, to signal a continuation to the downside.
Yep.
So what we would like to see is a clear break with a candle close below this level from a break of structure point of view, and then potentially trading into this order block here, and then see a continuation. For me personally, I would definitely look at targeting the lower levels personally, but it all depends on what price does.
Yep.
Like as I mentioned with his setup, I do agree with what he's saying. I would just look at these liquidity levels as point of interest with this imbalances that is created here, which could see some interest to us, but it all depends on what price is going to do and show us for the weekly setups. So definitely this is something that I would point out for a potential setup, or something that we would look at for a potential trade. That's it. But the rest, I'm 100% aligned there with that view.
Fantastic. All right, guys. So you heard it over here. Definitely on EJ, we definitely have a much better bias than on the other pairs where the euro is also bearish and stuff like that. So you want to take advantage of those things. That's what we as traders take advantage of, and that's what we look for. And so I'm gonna break down GJ for y'all. GJ is my favorite pair. That's one of the main pairs I trade, and possibly the only pair I trade. But let's just break it down. Let's just see what we can capture in the market. Let's just look at the market on a whole and dive right into this week. All right. So when I do look at GJ, we have come up on the monthly time frame, right? In the month of May to this high, and we did reject a psychological level on GJ specifically as the 155 800 level. As we know, GJ have two really important zones, and GJ does GJ responds to psychological levels a lot, especially whole numbers. And the two psychological levels that GJ responds to 90% of the time is the 800 and 500 levels, 0.800 and 0.200, sorry, 0.800 and 0.200 levels. And so for me on GJ, the only reason like I'm a little conflicted about GJ is right now when we look at it, the monthly time frame we have come up, right? We've experienced 12 days in September, and we have come up pretty far with no bottom wick at all. All right, so that's the only thing that concerns me on the monthly time frame, because if we do come up with no bottom wick, and almost 95% of all candles do have a top and bottom wick, then this could be a liquidity grab from the top, right, in order to continue back down. So when I look at it, when I went to the weekly time frame, I did see that we did have levels that was 150 to 550, 150 to 200. There were levels that we are rejecting off. So if you look at it, the last 2 weeks, we haven't been able to close above 150 to 200. Last week, we did have a really good a bullish move in the last 2 days of the week. That was Thursday and Friday. But we still weren't able to close above 150 to 200, which is a very key level to GJ, especially looking at how in the past we've bounced off in order to create various different market structures. So when we look at GJ on the weekly, we are looking at a bearish model, right? We're looking at lower highs and lower lows all the way around. If you look at it right over here. So I wouldn't be surprised if on the weekly we are to create another lower high in order to continue back down, right? But we're going to dive deeper into the daily. As we see 150 to 200, you see this level, clear rejections. This level is a very important level, right? So whatever we do in this region is actually going to show us of what we're going to do next week. So we do have these two rejections to the downside. So that's the 151 800 level on the daily time frame. We have a massive rejection wick on the daily time frame also from the top, and falling within our resistance or our supply zone, as you would call it. So failure to close above 150 200 152 200 would also give us some confluences to take sells back down. But what we want to make sure is on this lower time frame that we're looking at. So as of now, on the lower time frame, we look at the daily time frame, we have a minor bullish run, right? So we have that run of a high, a low, a higher high, a higher low, a high, a higher high, a higher low, right? So if we are to continue this model, we could definitely look at revisiting the highs at 153 200, and that's 100 pips from where we are right now, 150 to 200. But what we need to see is a clear bullish structure and the break of 150 to 200 to continue up. And as you all see, we do have these beautiful clean candles to the left, which we could definitely take advantage of. But also looking at this level, all right, also looking at the 150 to 200 level, don't forget that in the past we have rejected this level real solid. Can you see in this region we have had these spikes down, and so we do want to be careful when we are trading GJ this week. We do want to be careful of these levels, and so that's why I'm looking at sells if market structure in the first 2-3 days of the week play out in our favor for sells. And so looking at it, our 4-hour has now closed back in the range. We need to see if the 4-hour would the 4-hour time frame would be able to close below 151,500, because when we look at it from just last week's point of view, we came here September 2nd, we came here September 7th, September 8th, and September 9th, right? So we've had a failure to close below 151,500, and if we do close below 151,500, I would definitely be looking at sells to capture some of these clean moves back down to these levels. And so that's my perspective on GJ. But if we are to continue and start creating the monthly bottom wick, then the skies, I mean, like, GJ could just fall out of the sky from there. So that's what I would be looking at, especially with the confidence and the fundamental factors involved with GJ, where we're looking at fear, doubt, and uncertainty again with GBP pairs, but we're looking at confidence in the yen, right? Remember that yen is the safe haven currency. Whenever we see a fluctuation in the USD, we see massive confidence arising in the yen. So you want to again use fundamental factors and your technical aspect in order to capture some of these trades. And so that would be my breakdown of GJ. Ruan and Casanova, feel free to add to it.
Yes, sir.
Yeah, so
Anything?
that low right there where the market this week is came down to and bounced right up, came
Yep.
down to, bounced right up.
Yep.
That one there, yeah.
Yep.
So that level there, what I'm thinking is that's engineered liquidity. That's equal lows. So potentially what we might see is the market crashing below those levels.
Yep.
Simply take that liquidity, because almost all throughout last week they were bouncing down into that level,
Yep.
spiking right back up really quickly. So a lot of stops are below there, and if you look to the left, there's also some more swing lows right there as well.
Yep.
So yeah, I'm thinking definitely that's a really important zone for manipulation to happen, I think.
Definitely. That's fantastic. What about you, Ruan?
I do have to agree. If I look at the overall market structure and the engineered liquidity, for me personally, a lot of potential to the downside.
Yep.
With that shift in market structure that we've seen from the 11th August down to Friday, could be a potential setup for taking out the liquidity to the downside.
100%.
So I'd be quite interested to see what Monday brings and what sort of the range formation would be
Yep.
to set up the week. But at the moment, yeah, I'm also bearish on that.
Fantastic.
Definitely.
And Ruan and I caught these sells from up here at this price point, 550, below 550. We caught those sells just before market close, and Ruan, we could have held it for about 40 pips, man.
That one in EJ this week would have been insane.
Trust me. It's all right. So
We'll catch it next week.
oh yeah, trust me. So guys, you all have seen the analysis, you all have seen the thought process behind it. You've heard the way these guys have broken it down. You've heard their understanding of what we're looking for in the coming week. So I think all of y'all should definitely take notes. If you have taken notes, if you are looking at similar things, that's great, that's good. But remember to follow your trading plan. I think that's one essential thing. I think that's one thing Ruan and Casa and I decided to remind each other to just follow our trading plan. Stay within your comfort zone and do not over risk or over trade, because that's what will lead you to making some massive mistakes. And so, yeah, it was awesome for all of y'all to join us. Now, I think we're just open for some time to break down any other currency pairs y'all would like us to look at. And Ruan and Casa, do you all have any other currency pairs you want to look at?
Yeah, I've got two more.
The stage
If
is
you want me
yours.
to go through.
The stage is yours.
Yeah.
Let's go.
Right, so this is GBP AUD. So I'll just remove this just for clarity's sake for now. So I want you to look at, I want to bring your attention to this level here. This was the equal lows, right? and the market came down from this original consolidation and sweep this low with a fat and perfect pin on the 1 hour time frame, and obviously it would be the same on the 4 hour time frame and so on. But this was a sweep. So a sweep is basically where, of course, people put their stop losses below here, people put their breakout orders below this area because it's equal lows. People like equal lows, and that's where generally the institutions like to target. Now, I'll bring your attention back to this model that I use, the buy model. Original consolidation, another consolidation, cascade lower into a level, usually a sweep or an order block, support, whatever you want to call it, and then market rises up into the consolidation area again. Now, GBP AUD, you can see we had a very, very clear consolidation. I think everybody can agree this is a consolidation.
Yep.
The market then crashed below there, giving us this pull back into it. It failed to go back into the range and just cascaded lower. And then we got the sweep low. This is what the grey box would be on the model, right? So now that it's sweep this model, what can we expect? We can expect, based off of this model entirely, we can see that it will at least go into the original consolidation. So what I'm looking for Monday, Tuesday, and Wednesday is for market to, let's see, where's the path? To, come out in Asia, probably fake down low, and then come back up into this consolidation. And this would be my trade. And this is essentially what I'm looking for to be a buyer in the market. And this would ideally happen on Monday, Tuesday, or Wednesday, at the latest Wednesday. But yeah, this is GBP AUD. Very, very simple. Again, it's the same model. It's the same principles. This is all I use to determine my trend. And just to add further confluence to the fact that this is the original consolidation, I use the fixed range volume profile and go right from top to bottom. You can see that most of the volume is sat right in this consolidation there. Yeah. Very, very clear. Now, it's a very similar situation on AUD USD. Obviously, these are correlated markets, GBP AUD and AUD USD. Obviously, they're inverted. So, logically, I'm looking for sells on AUD USD.
Yep.
So, you can see the original consolidation here. I'm just going to use the fixed range, just add some confluence, just to see if it is. Yep. You can see right there, most of the volume is sat in this level right there. So that's the original consolidation. So what model is this? Very simple. Again, the market maker sell model. Consolidate again, fail to go back into range, come up to a certain level, and then cascade lower back into the original range where this started. So we can see the original consolidation here. It pulled back, failed to go into the range, went up high, took out all this liquidity up here and this liquidity right there, and he gave us this double top with a smart money reversal where it creates a high and fails to create another high and just cascades lower. And now we are in, I'd assume, the first red box right here. So that's why we see this pullback into the order block, or this order block right here, whichever one you want to use. And what I'm expecting Monday, Tuesday, Wednesday again is for market to open up, go higher in London for a fake out, or go up to an order block right here, and then trade lower into this consolidation, and that's where I'd look to exit. So this is what I'm looking for in the market. It's a sell model, so I'm looking for sells, as well as high time frame sells as well. You can see that we are in an overall bearish market. But yeah, those are my two other pairs. I think GBP AUD and AUD USD are probably some of the best looking pairs right now, with very clear consolidation with most of the volume sat in there, a very clear sweep of a level, and a reversal as well. So those are my two pairs that I'd like to add.
Yo, Casa, 1 second. What was your view? Can you show me a GBP AUD chart?
Sure.
GBP AUD chart.
Yep.
All right. Okay, that's fantastic. So, guys, you all see the confluence in the way Casanova has broken down GBP AUD and AUD USD, in the confluence that we have a weak Aussie dollar. And so he is looking for buys up on a buyer model on GBP AUD, and when he goes to AUD USD, Casa, you are seeing that he's looking at that sell model. So you see the confluence right over there. You know, it's not that he's conflicting his views on it. So that's fantastic. That's great, man.
Thank you.
Anybody, Ruan, you have any other pairs you're looking at?
I'm just busy looking and mapping out. Let me just share my screen here quickly.
Yeah.
So I am busy mapping up GBP UAD. I liked what Casa was saying, and I was just busy mapping out the sessions. As you know, with the case study that I did around the sessions,
Yep.
and what I found in my sort of back testing and that, just wanted to add a bit of context also to his thing, but it's going to take some time. But what I did notice in this GBP AUD is that if I look at a 4-hour perspective, we can see that the current sort of the major or overall trading, not major, not overall trading range, but if we look at the major, most recent swing high and swing low
Ruan,
as a trading range.
we're not able to see your screen, Ruan. Can you just try to reopen it?
I'm trying to, let me just try, because I put it off just so I can, let's see if I can do that. Give me 2 seconds. Let's see if I can, let's see if it loads faster.
Also, Casanova,
Yeah.
one of the questions was
Oh yeah, I just see it.
Yeah.
Fixed volume.
Yep.
So the indicator that I used is, let's see here. You just type in fixed range. It's a standard indicator that TradingView comes with. It's called fixed range. You click on it, and then you can choose whatever period that you want to use to inspect how much volume there is sitting around. I only use this to find out which levels there's a lot of volume sat at to confirm my original consolidation, or to find areas where potentially the market could reverse from or show reactions to, or show reactions from rather. I think on EJ we use that as well.
Yep.
To essentially see that the market would reverse. Like you can see here, the market reversed from this area. Well, not reversed, but pulled back into this order block from this area right here.
Yep.
But yeah, it's called fixed range. It comes as standard with TV. I recommend people use it if you do trade with this style, or even if you don't, just to use it for areas where market could potentially reverse from.
Fantastic. That's great. Also, guys, if you all are in the voice chat, feel free to just unmute and ask us, guys. We don't have a problem with that. And Ruan, are we set up?
No, it's still loading. I've tried that multiple times. Does not seem to want to play with us.
Do you want me to do it on my screen? And then,
no problem, Ruan. I'll share Casanova's screen and you can just explain it out.
Okay, so let me look at his. So basically, there where you've got that fixed range volume, the top there that you had there.
Yes.
Right. So if that's obviously our swing high, down to your SMR, which is your shifting market structure, as the low to the front there. We go from that range to just move your chart to the right, to that low to the right, that pink box you've got there. If we use that as a trading range, from that high, that low. What I've also just noticed, just mapping out my stuff on that, we're entering quite close to the sort of equilibrium of that trading range, which is at that sort of lower consolidation, that consolidation just before your mapped out original consolidation in the mid-level. And you can see that there's a little bit of imbalance situated right at the 50% level, more or less, where it's a little bit lower than that level.
What time frame?
I've got it on the, well, I mean, it doesn't matter. That should be the same range. So the level that I'm looking at is 1.88433. Should be more or less what 88433. Yeah. So that would be, based on my setup, would be the sort of equilibrium or the midpoint of that range.
Yeah.
And what we could see potentially is a short-term reversal just before that level, or rejection of that level, to grab some of that engineered liquidity to the downside before continuing up to complete that, obviously, liquidity grab and that model to the upside. So we could see that. I'm just looking at that, being mindful of that, using the similar concept as what we used on the entry for the EJ trade of earlier of last week. So that's just something that I looked at now.
Yeah, so something like this, yeah, where it comes up to the mid-level.
Yeah.
And like that. Yeah, okay.
Yeah, maybe a slight deeper retracement, but more or less, the similar concept. Yes.
Yeah, probably into this order block right here on the 1 hour.
Yeah. Or even grabbing that liquidity just below that range there. But yeah, we'll have to see what price does. But there's definitely more moves to the upside on that. So yeah, that's all I wanted to add there.
That's fantastic. No problem. That's good. And any other pairs?
Oh yeah, 1 second. Someone has just asked a question. Rex Brown. 1 second. Yeah. So hopefully you can hear me. So the way to find fixed range volume profile, you go into indicators, which is right up here. You type in fixed range, and it's one of the first things that appears. It comes as standard, like I said. It's not in the public library. You click on that, and you can choose whatever period you'd like. Or someone else just showed right there that there's a shortcut to it. Where was it? Right here. So if you go to this area right here, there's fixed range volume profile right there as well, which is exactly the same thing. Okay. No worries.
Yep, that's great, guys. If you have any more questions, feel free to shoot. And yeah, that's pretty much our analysis. We broke down I think we've broken down at least 10 pairs for y'all. And so this week should be an absolute banger. I think we're looking to absolutely get our way with the market right in the beginning of the week itself. But again, everything we do is within a fixed risk and within our plan. And I think Casa and both Ruan know what it is to stick to a plan. As you see, the way Casa also brought out, every single time he brought out analysis, he brought out his plan, those buy models, the sell models, right? He brought out those plans every single time. That's how you trade. You formulate a strategy, you formulate a plan, and you execute on that plan. And that's fantastic. Thank you so much, Ruan and Casa. We shall catch you all again tomorrow. If any of y'all want to join us, we usually do the London session on MFF, my Forex funds. I'm pretty sure all of y'all are part of that group. So yeah, it was a fantastic time. Thank you for joining us again. If you do want to rewatch the streams, feel free to rewatch the streams. Also, guys, just a heads up before the week starts. On Tuesday, we have CPI for USD month on month, 1 hour before. CPI and core CPI month on month, 1 hour before New York Stock Exchange open on Tuesday. On Wednesday, we do have GBP CPI, and that's year on year, so that's really important. We also have crude oil inventories. That's slightly less impact news for the USD. On Thursday, we do have core retail sales and retail sales month on month. That's very important for USD, along with unemployment claims. Again, that'll be 1 hour before New York Stock Exchange open on Thursday, September 16th. On Friday, we have retail sales for GBP at 1 hour before London open, and at New York Stock Exchange open on Friday, we have the prelim consumer sentiment. So be safe, trade the market safely, don't over risk, don't overtrade, and have an insane time this week. We wish you all the best. And so yeah, thank you so much, Kasa and Ruan. Thank you guys for joining us. Also, special thanks to Josso and Zipporah on YouTube. We shall catch you guys this week.
Thank you.
So,
Have a good week. Have a good week.
Have a
traders.
good
Keep
week.
it safe.
guys, have a good one. Cheers,